What's up everyone, it's Caddy with MoneyVest. So in this video, I wanted to go over one artificial intelligence and software as a service stock that has a ton of potential and is only getting started with respect to its move because it's still way below its all-time highs. It is in fact down a little bit over 30%, close to 30% from its all-time highs. And this market cap is just over a $50 billion market cap company that, like I said, has a lot of potential in both software as a service and, more importantly, with respect to artificial intelligence. So I would say that this is still somewhat under the radar, not being talked about enough. We've covered the stock in the past. I've done several analyses on this company, and it's performed really well in 2023. And so far in 2024, it's also higher on the year so far, a little bit close to over, less than 1%, but still up. So hope you guys enjoyed this video, found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. All I'm asking in return is that you subscribe and, of course, drop a like on this video. Links to our Discord and Patreon is going to be down below if you're interested in joining us and, of course, getting access to all the members-only private videos, all the trade alerts, including buy and sell alerts, options alerts, trade ideas. Everything's going to be included, as well as the intrinsic value spreadsheets, including our fair values and our watch list on different stocks as well. So links going to be down below. We'd love to have you on board, and also do connect with me on Instagram. My handle is going to be CastWRP, and we'd love to have you there on board. I do share a lot of portfolio updates, behind the scenes stories, tips, strategies, and polls over there as well. So the company that we're talking about today is going to be Autodesk. And Autodesk is a company that provides a lot of software for architecture, engineers, construction companies, product design, manufacturing, media, and entertainment. There's a lot of different software that Autodesk provides, so the margins are incredibly good. And again, they are kind of like the leader when it comes to architecture, engineering, and construction, media and design, product design, manufacturing, all those different types of products, including AutoCAD. We got Revit, Civil 3D, we got AutoCAD LT, Inventor, Fusion 360, 3ds Max, we got Maya, Arnold, Moxion, ShotGrid. A lot of these products are offered by Autodesk, which, if you are in the industry, you will be familiar with a lot of these products as well. Now, in their operating model, they've mentioned 10 to 15% compounded growth in terms of revenue, 30 to 35% free cash flow margins, and 45% plus growth has seen 45% plus margins on operating basis as well. Now, in terms of their fiscal 2024 third quarter revenues, up 14% on compared to over fiscal year 2022, over $5 billion. Income from operations is up over 60% from fiscal year 2022 to almost $1 billion. And non-GAAP income from operations, 28% increase to just under $1.8 billion. So it's a profitable company, very strong growth here. 5-year total shareholder return of 86%. So it's up over 86% of the stock price since 2018 as well. So it has somewhat outperformed the S&P 500, but it's still lower than Dow Jones US software and S&P 500 North American technology software. It's performed slightly better than that sector as well. Now, it is a subscription service. So again, it is a SaaS model at the end of the day, software as a service, and it's also a subscription model. So recurring revenue percentage, 98% as of fiscal year 23, and RPOs, that's the remaining performance obligations, sitting at over $2.1 billion on long term, and current RPOs less than a year, sitting at $3.5 billion, and that's been consistently growing. This is a good measure of where revenue is going to be, right? So this is a good predictable measure of revenues for the company moving forward. And third quarter fiscal year 24, again, 1.2 billion billings, $1.4 billion of revenue, $13 million in free cash flow, and 39% non-GAAP operating margin for the business as well. Now, this right here is the revenue mix. Again, 640 million actually is coming from Americas, 18% growth. Europe, Middle East, and Africa accounting for 516 million or 8% growth year over year. Asia Pacific, $258 million, slightly down 2% on a year over year basis. That's a geography mix. And this is going to be the different segments of products. So AEC is going to be architecture, engineering, and construction, 675 million, which makes a majority of the revenue for the company, 17% increase year over year. Manufacturing is going to be 269 million, up 6% year over year. And then we've got design and media entertainment, 98 million, that's up 1% on a year over year basis. And return to capital to shareholders, over $4 billion in share buybacks over the last 6 years, and 3 million reductions in share count in the past 6 years as well. So again, the share count has been going down, and that's exactly what we like to see for any company that we're looking to invest in. We want share buybacks, not share dilution. When it comes to fiscal 24, this is going to be the revenue at 5.4 to 5.46 billion, up approximately 9%. Non-GAAP operating margins flat, EPS 388 to 394, non-GAAP EPS 743 to 749, and free cash flow sitting at 1.2 to 1.26 billion dollars for the company, 743 to 749. So let's just do 750 to be on the safe side, to just round up a little bit. 241 divided by 750, we're looking at a price earnings multiple of 32 for the company right now on a 2024 basis, which again is going to be somewhat on the more expensive side, but we'll take a look at the intrinsic value of this company in just a minute. Now, when it comes to income statement model expectations, so gross margins to be approximately 92%. So that is again a very, very strong gross margin considering that it's a software business in the first place. We've got other income and expenses to be approximately 20 million and non-GAAP operating margin to be approximately flat on a year-over-year basis. CapEx of approximately $30 million and long-term deferred revenue as a percentage of total deferred revenue to be in the teens % as well. For the company, these are some of the markets and the total addressable markets that they foresee for the different industries that they belong to. So design and make, and basically that's going to be architecture, engineering, construction, $46 billion by 2027. And 28 million design and make professionals. Design and manufacturing, $42 billion all the way through 2027, 31 million design and manufacturing professionals. And media entertainment, 7 billion people. And that is going to be all the way through fiscal year 2027. 3 million professionals, 300,000 in, of course, film and TV, games, and advertising, public and graphic design as well. So if you combine all these, 49 plus 46, we're looking at almost $100 billion in total addressable market for the company. And it's still only scratching the surface, as you can see, that it's gone from like $2.2 billion to just a little bit over $5 billion in revenue. Gross profit's gone from just under $2 billion to a little bit over $4.88 billion for the company as well. So very nice gross profit margins, and operating income's gone from 300 million to well over 1.1 billion dollars for the company. So very nice consistent growth in revenue, gross profit, and operating income. When it comes to the bottom line, so net income's gone from $228 million to almost $1 billion, so 917 million. And we've got shares outstanding, so from 230 million down to 216 million. So again, we've seen a share reduction as the company has bought back shares over the last several years. And diluted shares outstanding, diluted EPS, in fact, has also gone up from $1 all the way to $4.24 for the company on a non-GAAP basis, sitting at well over $7 per share. Now, balance sheet is surprisingly not the best. The company's got 1.9, almost $2 billion of cash and a little bit over $2.6 billion of debt. And as a result, we do have a balance sheet that has a positive net debt of $475 million. Current ratio, quick ratio, not the best either. And debt to free cash flow sitting at under 4. So the balance sheet's not the best, definitely room for improvement here for the company. And valuation wise, as we pointed out earlier, we're looking at a 32 to 31 times earnings multiple on a forward basis, on a non-GAAP basis, in fact, and price to sales sitting at just over 9, and price to cash flow sitting at just over 28 to 39 for the company, with enterprise value to EBITDA sitting at 24 on a forward basis for Autodesk as well. Now, when it comes to margins, excellent margins. So we're looking at, again, a gross profit margin of 91%, net margins of 22% or 17% here. Return on common equity, capital, and assets also very strong of 76%, 17.5%, and just under 10% return on total assets. And net income per employee, another really, really important metric that we focus on, is $67,000 per profit per employee. That's up from $50,000. So that means the company has become more efficient over time as it's generating more profit per employee, a very, very good measure of efficiency. And when it comes to the growth rate expected, it is expected to grow from 749 all the way to 1922. If you plug in those numbers, we're looking at an 11% growth rate all the way through 2033. And if you look at just 2029, $14.18, so 14.18, and that's going to be 2029. We're looking at just under a 14% growth rate for Autodesk moving forward. So if we apply $7.50 and the share count is going to be at 216, so if you do 217 times 750, so we're going to plug that in, $1.6 billion is roughly going to be that number. So we plug that 1.6 billion in, 14% growth rate, 20 times P multiple I think is reasonable, 12% discount rate, 10% margin of safety, and 1% share dilution, 1% share buyback, 1% share buyback every single year. We're looking at a fair value of close to $154 per share with the current share price of $241. Definitely does mean that it needs to drop 36% in order for it to be trading down to that intrinsic value, where it would make a lot more sense. Now, If you play around with the sensitivity grid, so again, if you're taking a look at different growth rates and different P multiples, of course, the fair value is going to change. And right now, since it's sitting at roughly around 241, so let's see what the market's pricing in. So 20%, maybe 25 here on the price to earnings multiple. So there we go. Now it's almost aligned with the market. That means the growth rate is expected at 20%, price to earnings multiple of 25 is where we are right now. Of course, on a forward basis, on a 2024 basis, the price earnings multiple is 32. So if you apply 32 and if you apply 14% growth, then we're also aligned almost at 247. So it's really going to come down to this price to earnings multiple. That's really what the focus is for the company right now, which is a little bit on the higher side. So in my opinion, a more conservative approach is going to be closer to 20 or 25 times P multiple with a 14% growth rate, of course. That's going to bring us down to like 193 down to as low as 154 for Autodesk. But this right here is going to be the entire technical analysis where we are seeing a little bit of that higher low over here. And this right here, of course, is going to be that symmetrical triangle and a potential breakout to the upside. And there is possibility for us to see the price retrace back up to 254, 255. And that is going to be that next resistance and target level to watch for Autodesk, and a very, very strong area of support to watch right over there between 170 and 190 for Autodesk. So this right here is going to be that level to watch. Previous resistance acting as a support, and that is going to be that level to keep in mind for Autodesk, with a resistance all the way up to 254, 255 for this stock. So let me know your thoughts down in the comment section below, and what do you think about this company? Are you buying, selling, or holding? I'd love to know about your take in the comment section down below as well. Make sure that you drop a like, subscribe to the channel if you haven't already. Links to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.